So we're live. Welcome, Husayn. It's good to see you again. And, we're here to talk about a lot of different things, promise and peril of AI and Fintech, but, onboarding, friction, what we've seen for the past few months. But I think really to start things off, can you give some background on yourself, why you created Onfido and how you got into this unsexy business in some ways, or why you think it might be sexy?
Oh, sure. So it's great to be on. And so why we started, myself and two co-founders, we have our different reasons. For me, when I started university, I was already quite well aware of how broken the identity infrastructure was. And back when I turned 10, my parents moved from Iran to the UK. So I saw firsthand them having to struggle and open a bank account and rent it in their own name just because they weren't in the credit bureau. So up until university and during the university process, I realized that it was a broken process. And along with my two co-founders, we knew that we wanted to start a company. And when we look at the identity infrastructure, essentially most businesses had two options when it came to onboarding customers. The first is to see them face-to-face, which is inconvenient and has issues of accessibility. And then the second was to use credit bureaus, which are essentially a centralized log of your date of birth, name, address, SSN, and so on. And the challenge there is that it excludes half the world's adult population who aren't on the credit bureau, or worse, for all of us who are on there, that data is already on the dark web for the vast majority. So it doesn't offer much security. So you have a convenience problem, an access problem, and a security issue. So my technical co-founder, his university thesis was using computer vision and machine learning to spot wildlife in 25,000 photos of the jungle. So we could just, if you just apply that to a government ID check and a facial check, basically what happens in a bank branch when they enroll you, you can digitize it and you can bring it online so that you can give a much more convenient user onboarding journey, make it a lot more secure, and lastly, give access to a whole host of people who historically have been unbanked, underbanked, and have not had access. All they need is a camera-enabled device. So 8 years later, we're lucky that we are where we are. But in the early days, it was trust marketplaces, and then in the last 6 years, we've been hand in glove with the fintech community, especially.
Great, yeah. When we were starting Acorns about 6, 7, well, it was 8 years ago we founded it. But when we were building the platform, the onboarding KYC component was really important, and we could only scale as much as that component. So when did you really see the fintech start kicking in? And obviously, for us, we benefited from some rules. We didn't actually have to have photo ID. We had to have certain information, social security information, name, address, and we had to match a certain level of that. But I guess initially, so what differences do you see in demands or needs for fintechs based in certain regions, and how have you built sort of a global company for something that seems so regionally specific?
So when I started first to see the fintech space emerging, this is 2013, 2014. It started way before that, as you know, but a big driver really was the 2008 crash.
Yeah.
But that was like maybe on the demand side, consumers started to rethink what does trust mean, and what do they look for in a financial service provider from a demand side. And also on the demand side, at that point, we started to get used to the iPhone or good user interface. And so that's what became the norm, especially for the smartphone generation.
Yeah.
And on the supply side, you had regulators giving specific licenses just for payments or just for remittance. So you don't need the full banking license. You can just click the version for the products. The server costs becoming a lot more affordable, so you don't need to invest too much to start a company. The role that we played was part of that infrastructure to digitize the onboarding process, because again, our building block as an identity verification company was the smartphone, internet connectivity, and so on. So it's kind of the demand side and supply kind of coming together, because the different building blocks made it possible. And then you started the rapid rise and growth of fintech. So prior to that, whether it's PayPal or before that, they are in many ways fintechs. It's just the proliferation of fintech was as a result of all these things coming together. So in large part, it was very well timed. And as the fintechs that succeeded fundamentally, like Acorns and many others, put the customer experience first. So because they were our biggest revenue generator, we had to optimize for their needs, and then we improved, and so that we kind of grew together. All that as far as the experience of seeing the fintech community grow in its early days. Then the question on the global reach and geography. There are so many similarities, as you know, between the way that the playbooks and the rollout plans of the majority of the platforms. Now, yes, there are finer nuances per geography. There's some cultural points. There's also regulation that's different. But the underlying tech and like the underlying user flow and so on is 99% the same. So what we wanted to do was to standardize the identity layer, government ID and facial biometric, using a camera-enabled device. And we developed the infrastructure and the technology from the beginning to make it as standardized across the world as possible, so that if you're one business, you can just switch on more countries in a relatively easy way. It's not always as straightforward, but on balance, it's always been on the cloud. It's always been SDK driven. You know, it doesn't matter what type of smartphone is being used. It can be browser based. All those things came into play. But regardless, like China still is an example where we're just not active. We do quite a few checks as for individuals outside of China. But broadly speaking, the world is now, when it's digitized and when marginal cost is low, it's essentially borders don't make as much sense anymore.
That makes sense. I think that the explosion of apps have probably changed demands in terms of experience. You know, people are looking to sign up quickly, and people are looking, probably to sign up more quickly on their computer than they would in person, and on their smartphone, people have just an ultra short attention span. And so, can you speak to like how you actually speed up the onboarding process? Because I know every second counts for startups and fintechs in terms of getting people through the onboarding experience. But how do you prioritize making it faster for your clients?
Yeah. So the first thing is you have mainstream or more traditional institutions not understanding the appeal with fintechs, and you tell them like, have you signed up to one? If it's going to take you 5 days to go and open a bank account, you have to find your utility bills, walk down the high street, wait in the queue, and then faff around with paper documents to a human, which is not necessarily often an expert.
Yeah.
And yet at home, you want to sign up, you do it in 5 minutes on your phone. Like, there's a stark difference. Now, with this fintech's obsession with the customer experience, the 5 minutes, as you know, is never good enough. How can we make it 2? How can we make it 1? How can we make it 30 seconds?
Yeah.
So in Quest, it's a range of things. So your question on examples, back in 2012, it's just, can we take a photo of the ID? And again, the iPhone came out with the focus feature in 2012. I mean, it's a tiny, well, whether it's tiny or big, it's a small feature. Most people won't remember that. But that in itself meant we could exist. Like if that hadn't come about, the quality of the image capture would be so poor, it wouldn't have been worth doing. Hence my question around the infrastructure building blocks coming together to enable us to do what we do. So essentially, at the beginning, we're just like, let's just capture an ID, that would be special. But then as time is going on, is how do we make the SDK lighter, but able to catch more fraud and fake at the outset? And now, in case of how can we auto capture the ID without having the person click it? So it's moving towards peeling away layers of friction whilst you're adding fraud features, whilst you're adding it for a greater number of ID types. It's hard work. And that goes back to, in some ways, like the theme of our discussion around the capabilities of AI, because AI has ultimately been the enabler to not just us, but the majority of these infrastructure companies be able to do and just get better with time.
So, as you evolve your product and lean on AI more, if certain processes or certain things are automated, and you can onboard more customers, you get better and faster. What problems can arise in terms of if no one's taking a look, or if fewer people are taking a look at things? How do you check on the AI?
So that's a good question, and one shouldn't focus or obsess about AI either, and or narrow AI and machine learning, because machine learning can be thought of like a set of models or algorithms or rules, a set of parameters, and then you feed it with data and you want to get results. Well, it's not suited for every type of situation, because if you think about what we do, we take a government ID and a facial biometric. We're looking for fakes. We're looking for outliers.
Yeah.
And machine learning is about patterns and parameters, and by definition, it's not for outliers. It's the opposite. So, and there's a range of, and this is a part of the issue with universities and courses, where the training is, they just teach you just to think about machine learning and looking to apply machine learning to everything. And so you have incredibly bright students coming out of university and courses that are just looking at, it's like to a hammer, everything looks like a nail, just focusing on where can they apply machine learning, yes or no. Whereas a true engineer, programmer, or problem solver ultimately, and more important question is machine learning relevant to this or not? So although we have significant parts of machine learning to the different layers of checks, classification of the ID type, clear machine learning, extraction of the data, predominantly machine learning, fraud types and different types of fraud, some are machine learning, some are absolutely not. Mm-hmm. And the non-machine learning models that we have will always outperform the machine learning ones just because of the problems that they're solving. Mm-hmm. So one point is around, as far as the perils go, knowing where you should use machine learning, and more importantly, where you shouldn't, is as important a question. And secondly, where does the human touch come in? So the first is the recognition that, machine learning, as great as it is for your company valuation, it doesn't necessarily solve a customer problem, because customers don't care what you use, really. They just care about the value relative to others. For them, we have had the human touch embedded into our system from the outset. Mm-hmm. And one of the things that set us apart from our competitors was we didn't, from the beginning with clients, we told them, look, we're not perfect. Like, we're kind of like an antivirus software. There will be viruses that cheat our system. There will be fakes that cheat our system. But the way we've configured it for you is that we sit in the middle of all the different businesses. And when a fraudster cheats us and we have a feedback loop with you, you would tell us a month later. And when you tell us, our models, we'd learn from that. And then over time, we'd stop that coming back to you and others. So everyone benefits from the network, essentially. So what we can tell you is that we're going to be better than any of your internal operations, any of our competitors. We can't say we're perfect, but we are able to commit that we're going to improve faster than anyone else. Mm-hmm. And that really was a pitch that resonated. And we went with that for a good 4 or 5 years before competitors started to even fully grasp our pitch. There's only been a year since others have started to share a similar pitch. Obviously, you have to live up to that, but that's several points. So the human component is key to that, because we've said where machine learning models can detect the ID and the face, the client gets the results straight away. But where we are not sure, we have fraud experts double checking, they're labeling and processing, so you get the checks back and our models improve. Mm-hmm. And so that human hybrid machine learning model has been our model, and sort of the key to why we've been fortunate and been able to do well. Mm-hmm. And moving forward, we kind of clients know that we are here focused on solving the problem, not necessarily being fixated on any specific model.
So when you work with your clients, obviously you work with oftentimes the compliance teams at fast growing startups, and that has its own dynamic, right? Because compliance and startup often don't go well together. But I think many startups realize that they have to get that part right in order to scale effectively. Do you find that, the compliance teams that you engage with to get feedback are more proactive depending on the type of startup? Do you see the teams more integrating? Some companies, if they were to outsource their compliance, obviously that would be a more difficult, maybe not as fruitful a relationship. Can you describe the types of structures of compliance teams within startups that you've seen sort of be successful?
Sure. So we have the fintechs that are scaling. A big part of that is the regulation improvements and servers becoming available, whether it's Azure, AWS, and others, but also the RegTech piece, the regulation being streamlined. And technically speaking, we're a RegTech in that we take the regulation, we convert that to API code so that we make it more scalable for smaller fintechs to be able to scale. And the majority of these fintechs, as you know well, the compliance teams are a fraction of what the mainstream banks have, maybe sometimes a factor of 1 to 100. Mm-hmm. But because they're online, they're at greater risk potentially. Fraudsters and cybercrime comes into the equation. So a fraction of the resources and yet a big challenge. And often you're not licensed for the first few years. You're piggyback riding another license. So you have to be extra careful, extra clean, extra low risk, extra secure, and all the other things that go to it. But that's great because we and others like us step in and we say, look, we have a tool, machine learning hybrid approach, and we are here to help streamline these processes and to do it on an API basis so that your small team relative to your volumes, relative to mainstream institutions, that means you realistically need to be more selective of which individuals you double check. So that every 100 people that come through, we're able to give you the green light for like 90, maybe 5. You have something to review and double check, and maybe 5 you are able to say no to. But you want your team reviewing the 5, not the 100. And so we give as much rich information as possible so that the underwriters or the relevant compliance team are double checking those 5. Because we say this ID is black and white or it's expired, for some that's fine, for others it's not. So it's being able to give granular details so that they can make that decision. And then that's the definition of RegTech. It's helping fintechs be compliant in a lean way.
Yeah.
It's using technology to be compliant because that's happened ever since computers were around. So it's specifically helping fintechs and others be compliant in a lean way is actually the more important bit than the using technology bit, in my view.
And I think that also helps give, founders a grip on that part of the business. I mean, our audience today is largely founders of fintechs, CEOs of fintechs. And, do you have some advice that you can give to them in terms of wrestling that part of the business? Because I meet lots of ambitious founders that want to build a fintech company. And too often I hear, hey, on the compliance, we're going to outsource this, or we'll have some lawyers look at it. And I encourage the founders, I'm like, hey, you should understand that part of the business, study the partnerships that you can make, the vendors that you can use. Do you find that that you're able to engage with founders and sort of management of these startups in a special way instead of just a compliance consultant, which often happens to the detriment of the company?
It depends on the nature of the line that they're in, of the vertical that they're playing in, and the nature of the risk and how well it's understood and how important the judgment call is. But exactly like you say, I would get really into it. It's kind of like recruiting. You can have your best people interview people, but you as a co-founder on an important role really ought to have a say. It's your judgment call. It's the same with lawyers. Like unless there's really, and then who doesn't love lawyers? But they need to be helped with strong guidelines and a judgment call, and that their objective isn't really to minimize risk as such. Like that's not necessary. It's to further the company's goals while minimizing risk. And there's a balance to be had, because the way you can minimize risk is to say no to anything. You say no.
Yep.
Risk lowered, right? So hence that balance is key. So as for outsourcing, ultimately financial services is predominantly about statistics and predominantly about risk at its core. So really, given it's a heavily regulated industry, you ought to crack that well. And as better than I do, those who are able to crack the bottlenecks are the ones that are scalable. And the key bottleneck often is compliance, it's often in onboarding. So it's less about a question of, so not to outsource the decision-making or the essence of the risk, but to use as many tools as possible to streamline the decision-making is the way I would think about it.
Yeah.
Hands up, I've never actually ran a fintech like you have, but being engaged in all these conversations, if I were lucky enough one day to be involved in a fintech directly rather than a RegTech, it'd be more a case of let's just improve and streamline as many tools as we need to help us make informed decisions. But we own those decisions and we want to prioritize scale, not frustrating the customer, so not a bad experience, and ultimately trying to have rules or streamlining these processes as much as possible.
Yeah, on the founder side, when we were building Acorns, initially it was tempting to not dig into the regulations and the compliance because part of it seems it's intimidating, it seems boring to some extent, and yet the company that we ended up building was entirely on top of our self-carrying broker-dealer or investment advisor, all of the books and record systems. And once we had a grip of that part of the business, we were able to own our product truly and deliver by far the best experience at the time. And it's good for founders, for product people especially, to have a grip of that part of the business. And I think sometimes in startups, especially in consumer facing fintech companies, the shinier part is the app, the design, the customer experience. I think is so often disconnected from regulatory compliance, and a light goes off once people see, oh, I can understand that part of the business. I mean, at Acorns we had our compliance team close to our design team. I mean, very different people that probably wouldn't ever interact anywhere, even if they're at a party together. But once they felt that they could communicate, once the design team felt like, oh, I'm allowed to see into the side of the business, the types of problems that could be solved, and the types of improvements to the customer experience were orders of magnitude better than if they didn't think they could have a grip of that part of the business. And so I think what you're doing is helping give founders and leaders an opportunity to own that part, and that's such an advantage for fintechs versus these much larger established financial institutions, which have huge teams, and even their product team probably very rarely communicates with their compliance team. I'd want to segue a little bit over to talking about this pandemic that has really changed how we communicate. In some ways, it's nice. Obviously, every event that we have can be a global event, and I feel much more closely connected with some people, and I guess disconnected from others. But how's that impacted your business? I read that you're on the front lines in many ways. You're talking about health passports and other types of products. But how has it changed your outlook, and what are you doing that you'd like our audience to hear about?
So there's the internal and the external piece. On the internal side, we went into working from home a couple of weeks before the actual most other companies, or like you were asked to. So we're just about 400 people. Mm-hmm. We're spread across 7 offices. Okay. But before the working from home or the lockdown, we had 10% of the team were permanently remote, and obviously after lockdown we're 100% remote. So we had earlier on worked on the fact that because we're spread across 7 offices, to be pretty agile and pretty good with communication tools. And I think this is the one core advantage that all scale-ups, majority of startups with all scale-ups have. So if you're fewer than 10 people and you're still figuring out the product market fit, there are benefits of being around the whiteboard, as you know, right? And all that good stuff. So those who are at that stage need to just work harder to not miss out. Mm-hmm. And relatively speaking, your competitors, everyone else is in the same boat, so you shouldn't be any worse off. But that I feel sorry, and that those with smaller teams, if they're still in the very early stages, it is harder than it would normally be. Mm-hmm. And others on the other end of the spectrum, more corporate environments where everything's pretty rigid and everything's pretty set, I can see why it has been tough for them to adapt. But if you're a fintech or a scale up, like this should be second nature. It should be in your DNA to be able to adapt and to be agile. I think it was Darwin, right? It's not the strongest that win, but the most adaptable that win, or adaptive. So we fortunately were able to adapt, and we have a number of different initiatives, more online socials if we can do them, more all hands, and in making sure team leads check in with their team members more effectively, being mindful of the fact that some are now parents, and they might need more flexibility around when they can do meetings with you. Because again, if you've got a younger team, they don't always think about the parents or others. So those are the things that there's so much good material about that written, so should be mindful of that. Mm-hmm. Now, externally, although it's very much a tough circumstance for everyone, we are in one where ultimately we do remote identity verification in an increasingly remote working world. So documented that the usage of fintech's up. We do a lot in online healthcare and all those similar verticals. So we're significantly up on what we had even forecasted ourselves.
Mm-hmm.
As naturally, you mentioned health or immunity passports. Is that having this presentable proof of your health status if you want to travel in an airport or go into a care home or a hospital. Those are predominantly at pilot stage, but there are a growing number of those pilots, and we're playing a role in that. For the pilots that are live, you're just sharing the fact that you are who you claim to be, and this is a test result without sharing any personal information. So it's just a yes, no, and not personal information. So that's the key role that we play in that. No private information is shared.
Interesting. Do you think that, the shift towards digital is obviously accelerated dramatically right now? I mean, I couldn't imagine a traditional sort of paper-based business in the identity verification space surviving right now. Do you think those? Is there a push to change for everyone? Do you think that is this the death knell to the way things have been done before?
I think traditionally, the path to digitization has started for a few years. It's just some, especially large mainstream banks, had a 3 to 5 year plan to digitize, and that's been brought forward to 3 to 5 months where they can. Not all of them, right? It's how I job that, but it has been put as a number one priority, because if you don't have people going to your bank branches to open bank accounts, then you don't really have a business, and therefore you have to double down and become digital. Hence, the forward thinking and the front runner banks that were looking early to learn from the fintechs and started digital propositions are now much stronger and able to adapt to this new digital world. So in essence, it is the digitization is just kind of accelerating. Mm-hmm. In parallel, there are new things, and it's unlikely that the post-COVID world will be significantly different to the pre-COVID one.
Yeah.
And as far as fintech, there's now a greater risk of carrying cash, mm-hmm. because it's a hygiene risk. So we all read about the payment platforms doing particularly well, but it's now moving forward. More and more businesses are likely to only accept non-cash means of payments because of this hygiene factor. Mm-hmm. When outside of fintech, when you want to check in at a hotel, or like using Clear to check in at an airport, we've been servicing those for a while, but now it's accessing buildings or train stations or other places where you're using some sort of digital identity as opposed to handing over your passport ID or something similar. Mm-hmm. So these are the things that are early signs of things to come.
And for the fintech founders out there in the audience, and we actually just have a few more minutes. I think we're actually a bit over the time. A lot of people are thinking of, they're starting a business, they have a fintech company, and I think there's a lot of inspiration around right now in terms of realizing that you can do business a different way. A lot of people, I think, have been discouraged historically from starting fintechs because they're afraid to dig into the regulatory requirements and the compliance aspect of it. Given that you're making it possible to handle a good portion of that digitally, what types of companies and products are you particularly excited about, and what advice, sort of parting advice, do you have for founders right now to get an edge or to make some progress, even if they're currently locked down?
So the products that from an early side, from an early stage, it's clear that they're going to do well. One is the majority of the conversation is customer experience. We kind of know that they're on the right lines. Second is more a case of how do we streamline and get on top of this question, whether it's compliance or regulation, so that we can turn it from not being a burden but a competitive advantage. Mm-hmm. That's a good sign. Third is, I think, again, back to our earlier conversation, like borders should not matter as much. We really are in a digital world, outside of the regulation, partly the cultural thing, like where possible, have a broad vision, maybe not just one state, but across a number of states in the US, or across North America or Latin, and then hopefully Europe and others. I personally, you said, which ones do you like? I do like the ones with global ambition. Mm-hmm. And lastly, if there's something to be said for, the old rules don't really stand anymore. Mm-hmm. We were all taught you should just focus on one vertical and just run with that. But the majority of the most amazing fintechs are rapidly branching out to other services as well. So it's not to get locked down with old ways of thinking, because what the focus was never really focused on a vertical. If you are focusing on the customer and it's the customer need that drives your behavior, you might end up like Amazon that's doing so many different things, or a lot of these fintechs. So those are some of the things I would share.
Great. Well, it's been a nice discussion. I prefer it in person, but we're grateful to be able to connect today. And I hope to get out to London again soon when it's possible and get another dinner. But thank you so much.
Likewise. Great to speak.
All right. Take care. Stay safe.